Thank you for joining another session of RM Smart Investing Weekly Analysis. I hope everyone has been enjoying their weekend. Uh, Starting this week, we're gonna try something new. Rather than the three segment of our market analysis, our lesson of the week, and the trade of the week, we're gonna limit this for two sessions, which will be the market analysis and the trade of the week. And the lesson of the week will be sent out in a separate in a different day. So kind of give it a break. So my goal is to get the market analysis to you firstly. So what week we had. This is for July 13th. And last week, the big thing was obviously the inflation numbers, the CPI and PPI, and the markets were looking forward to that. So this week, we will look into that. And also in our trade of the week, I like to go where one of our strategies, which is pretty successful, the CPI trade and NFP trade, we call them bracket trades. They give you a very good edge and advantage. So we will review that. Also, the markets, it was an amazing day on Thursday after the CPI numbers. We saw a big sell-off in the big tech companies, the Magnificent Seven, and we saw a rotation. So we will discuss the rotations, what happened on Thursday, and then why the market moved on Friday. And again, the earnings season has started. We started on Friday with the banks, the main ones. So this week we are going to be in a full roll. So we will review what earnings to look forward to. So last week, as we mentioned, the most important thing was the CPI number came out on Thursday, and it was better than expected. So instead of going up a month over month as 0.1%, it came at negative 0.1%. And the same thing with core, it came less than what the expected number was. And basically, what it told us that it is something that we have to be encouraged, and maybe the Fed will be dovish. And basically, there is a hope for the rate reduction sooner than later. And with that news, what happened was all of a sudden, the rotation started from the mega caps, the big successful technology companies, going to the small caps, which have been really flat year to date. The value side of things and the things that they've fallen behind, some of the actually, we call them ugly stocks, they started having big moves. And that's what we call rotation. Now, then PPI number comes, which is this is the producer side rather than consumer side on Friday. And the numbers basically actually came worse than expected. So what happened was basically the numbers came a little hotter. And again, what happened was then the markets decided to say that, oh, maybe the economy is not gonna really go to a big slowdown and the economy is gonna be okay. Well, let's go back to the big cap stocks and big stocks. So there was the rotation backs to them. But also, again, the Russell had a nice moves and it continued moves, which you will see. We also had the consumer sentiment. It's still above 50, so which is positive, but it came softer than expected. So with that in mind, we always look at our inverted yield curve, which continues. As you can see, the 2 years at 446 and 10 years at 418. Even 30-year is less than the 2 years. So what we see is still that inversion continues. So what kind of a week we had? Well, the Dow was the big winner. They were up 1.6%. NASDAQ was flat, especially because of the big sell-off on Friday. As you can see, it's interesting, by the way, the Dow parked right at 40,000, and we closed at that finally. As you can see, we hit the all-time high. S&P is at 56.15, and we were up almost 0.9%. Now, gold was up slightly. They've been positive, but copper was down about 1.95%, and crude oil retraced a little bit, down 1%. So what we can see is basically on July 10th, we hit the all-time high on S&P, the same thing in NASDAQ, and we only down 0.33% from all-time high of July 10th. And NASDAQ, again, that Thursday really affected it. So what happened for the week total stock market and the Dow Jones universe was up 1.25%, but you can see the large cap growth, they were down 0.23%. On the other hand, we look at the small cap value, the small US small caps, we look at even US mid cap value. So we see they're up very, very nicely. As a matter of fact, I think year to date before this week, IWM or the Russell 2000 was up only maybe 1%. Now it's up like 7%. We made up over 5% in just 1 week. From the sentiment point of view, all of a sudden, on Wednesday, the AAII members decided to be 49.2% bullish, which is way above the average. And the bullishness of the bearishness went down all the way to 21.7, and the average is 31. As far as the CNN fear and greed, we just crossed from neutral to greed. And this Citigroup panic euphoria has been continuing on the hot side. We are now really way up there at 0.52. So we are in that euphoria side. So as far as the SPX, as you recall, we've been working on the August to October of 2023 high low, that 200% at 54.22, 261% at 54.22 has created a nice support zone. And then we can see this 8-day exponential moving average has been nicely cushioning our move, as you can see, going back all the way to beginning of May. So, that continues till we go below that 8-day exponential moving average. Also, the other Fibonacci numbers we are looking at from the high at the low of April, we see that again, 55.77 has created a nice cushion and support. And so that market, this is telling us that there is a good support. We did have, you can see, we did have some consolidation, some rest area here, as we call it, got our, our breath back, and then another nice move up. As far as the Bollinger Bands, as you can see, that 18-day moving average was supporting nicely. We are embedded, MACD is up, and we've been hugging that upper edge of the Bollinger Band. Even on a weekly basis, see how long we've been hugging that Bollinger Band on a weekly basis. We still embedded. So again, we have talked about July being a strong month. So far it has come in intuition, as you can see that since April bottom, since that 18-week moving average, we've been moving up. As far as NASDAQ, again, that Thursday, we had this big sell-off, and then we did bounce a little bit. And one thing we want to look at it, we are overbought, so we lost our embedded, and also MACD is about to cross. So let's see if this rotation will continue. When we look at the weekly, though, we see that hugging that Bollinger Bands expanding. So basically, on the weekly basis, we are embedded and MACD is positive. When we look at Russell, for instance, in this situation, let me just go back. As you can see, this Thursday was a huge move, big move on Thursday. After hitting the lower edge of the Bollinger Band, we were oversold and we nicely moved up. Even Friday was a nice move, but that upper edge of the Bollinger Band created a resistance. So we broke above the 18-day moving average, but we still below that 100-day moving average. The VIX, on the other hand, with all that movement that we've had, still consolidating, and look, there's no movement, so there's no panic in the VIX. coming back to the 10-year and we looking at the yields, me, yeah. So what we can see on a 10-year, sorry, let me go back. This is actually our, um, now this is our Russell. Again, we had a nice move on Russell. This is actually a wrong one. So my apologies on this one. Yeah, Russell had a really nice move. Again, this is the prior week, so a little mistake there. But this is our Dow Jones, and it's amazing how the Dow Jones transportation gave us a nice rebound. So we had remember, this has been complete opposite of where Nasdaq has been going. So it was nice to see this big rebound on, and as I mentioned, it's a rotation. The VIX, as I mentioned, has been really consolidating and not showing any panic. The yields have been going down, and especially after Thursday, again, it's saying that, oh, the looks like that we will have a rate cut, and the Fed will look at this and, well, there's a slowdown in the economy and inflation is cooling down. And then on a weekly basis, though, we did break up under the 18-week moving average, which is good news, but we are not too far from 100-week moving average, which could be a support. And that will be at 3.99, almost 4%. So let's watch for that as a support. 10-year yield is, on the other hand, opposite. We did go up. We are overbought at this moment, unless we have another day, and that will give us good news. We have broken above 100-day, and we have broken above the 18-day moving average, close to the upper edge of Bollinger Band. The same thing on a 30-year bond, except we are not even close to embeddedness. We are overbought, but we need 3 or 4 more days to see if we can continue the strength. You can see we have, on Thursday, we broke above the 18-day moving average. Dollar, it has been going weaker. We had the election in Great Britain, as you know, and softer results in France. So basically, we just broke under the 100-day moving average. Now, we want to see if there's a confirmation with the continuation. We have become embedded. MACD has crossed, as you can see. We talked about it last week. We were talking about we have broken we lost our embeddedness. We are overbought. So generally, it goes to the support. So now we have broken that. Let's see if there's going to be any short covering, because we are outside the Bollinger Band and the shorts are going to be out. So maybe we will have a rebound. So let's see if how much we're going to stay under that 100-day moving average. On the other hand, when we look at the weekly basis, as you can see, on a weekly basis, what we have is that 100-week moving average, which is coming at right around 103 or so. So 103.7 now, about 103. So momentum is down. So we'll see how far that will go. As far as the euro, the opposite, we broke above the 100-day, and we are above the Bollinger Band. So this is where we need rest, although we're embedded. So let's see if we will have a little retracement. So we'll see if that's going to keep above that 100-day moving average. Gold has been moving nicely. We have been hugging that upper edge of Bollinger Band. We are overbought, though, so we need to clean that and just consolidate. Silver has been just consolidating right around the upper edge of the Bollinger Band. Now we are overbought, but we're trying to get embedded. MACD is positive, but we're still above the 18-day moving average. Copper also holding its 18-day moving average, and we shook off our overbought position, and now we are waiting maybe for the next leg up. So let's watch that. As far as the Bitcoin, now we will talk about Bitcoin trade of the week as soon as we close below that 100-day moving average. We were in trouble. One thing I see, though, you see there is a divergence down on stochastics. You can see we have a higher high. I mean, yes, it's a higher on stochastics and the lower in the price. So maybe we have shaken off the loose hands and weak hands. So hopefully we can start moving. I want to also show Ethereum. We broke below that 100-day moving average. Now we are consolidating. The hope was we had this nice move from this 100-day moving average. The hope was SEC will approve the Ethereum. They haven't for the ETF cash. So there was a lot of disappointment. So it's wait and see game for that. As far as the crude oil, we did have some retracement. We have shaken up. So we are right about the 50 on stochastic consolidation in MACD, but we are holding above that 18-day moving average. As far as expected move, it was beautiful move on S&P. As you can see, we really respected that upper edge of expected move. Now, what happened on Friday, we did go outside. And as far as the outside move, we did hit the highest move as far as the value of S&P, but we retraced and we closed right close to the upper edge. NASDAQ also hit the upper edge, and then we closed actually right around the expected midpoint. Dow was the strongest one. You can see we had Russell was the strongest one. You can see how far we are outside the expected move. Dow was also strong on Friday and Thursday, and then we have moved outside expected move. Gold respected its upper edge of expected move, and silver was flat. And basically financials, they did go actually outside their expected move, and energy was right in the mid range of expected move. I've been adding the crude oil. We respected the lower edge of expected move, and Bitcoin actually had consolidation close to the upper edge of expected move. Thank you so much. I hope that was helpful. And now we move on to our second segment, which is the trade of the week. Thank you.